Good morning, everyone. Welcome to the option tradings. In options, buying the option is better or selling the option is better. Which one to choose? For buying an option, you just need only 10,000 or less than that. For selling, you need 1.9 lakhs or more. So let us look. What are the benefits for buyers and what are the benefits for sellers? Let us look into this now. When an option buyer, he will buy the options by paying the premium, which means he pays the money and get the rights. Whereas the seller, he sells the option and he receives the premium. So whatever the money that he receives, that is a profit for him. So the option seller is holding unlimited risk, whereas the option buyer only limited risk. Whatever the money that he pays, only that is the risk for him. So I hope now you understand this concept. Now let us look into the other options of option sellers. When an option seller sells it, the time is favor for the option seller. Each and every day, minimum 20 rupees to 30 rupees, he will gain it in case if the premium is same or if the underlying spot price is same. Whereas if the option buyer choose to carry forward, then he will lose around 20 to 30 rupees per day, even though if the underlying price is same. There are other benefits for option seller. The option seller do not have the rights in the stock direction. He need not be exactly correct. If he thinks that the market goes up, even if did not go up, even if it is in the sideways, still he is earning profit. Even if it is going negative, a little bit negative also, he will be in profit. Only in the exactly opposite direction, if it is moves a sudden jump, then only he will be in loss. Whereas option buyer, whenever he thinks that market goes up, if he bought, it should go only up. Even if it stays in the same price, he will be in loss. So this is the advantage of option seller. There is one more benefit for the option seller, which is volatility index. In India we call it as VIX. Even this volatility favors that option seller because whenever the volatility increases, the premium increases and the option seller will reap the benefit of the premium. So again, this is the third factor, whereas the option seller is getting more benefit. Now you know there are three factors which is in favor of option seller, whereas for option buyer we don't have nothing to say except when he buys something it should directly go up. That is the only thing. Apart from that, nothing else. Now let us look at the market on 6th July 2020. This is the Nifty Bank. If you look at the graph, the market opened and after that almost till the midday it was going in the sideway. So this is good for option seller. and even at the last minute it just moved a little bit up and little bit down, and almost it ended in the same place where it opened. The movement of a bank nifty is very less during this time, or it is unpredictable. During this time option selling is better. Now let us look at the one more day, 4th August 2020, same Nifty Bank. From the opening price it just moved up within the next 2 hours. This is good for option buyers if he predicts well. And even while closing, from the opening price it moved around 300 points up in the Nifty Bank. This is good for option buyers because in intraday he could get 300 points up, and if he would have used the call option he would generate good money in this. This is good for option buyers. Now I will explain you the difference of option premiums. This screenshot was taken on 13th August in the morning. The Nifty price is 11,342. I have taken the strike price of 11,350 for 13th August, 20th August, 27th August, 24th September. For 13th August, the expiry is going to happen at 3:30 p.m. whereas I have taken the screenshot in the morning around 10 a.m. For this 11,350 call option, the underlying price is 11,342, which means it does not have any basic value, only the time value is there. I hope everybody knows about the option pricing. Option component comprises of two things: time value plus intrinsic value. For this 11,350 call option, there is no intrinsic value, only time value is there. Because of that time, it is trading at 31 rupees. By evening 3:30, if the Nifty did not go above 11,380, then there is no use for option buyers. He will lose this entire 31 rupees the premium. Whereas for option seller, if he sell this and if the market did not go up, did not go down, if it stays there itself, he will be getting this 31 rupees into the lot size which he buys it. This is the benefit. Now I will show you the graph for the option buyers profit ledger book. When he initially choose to be an option buyer, his profit may slightly increase, and sometimes it may, he will get 25% in intraday or something. But when he do one wrong trade, almost his half of his premium will go out and his ledger book will come down drastically. But if you look at the option seller profit book, it will be a straight up. He will be just getting only the option premium as the money. When he sell a option, he will receive some premium that will be adding to his account. Only that much is the profit for him on that week expiry. There are weekly expiry and monthly expiry. He can trade in any way, but only the premium which he receives will be the profit. Even though he carries an unlimited risk, that will not affect most of the time. Most of the time he will be in profit. Very less percentage he will be in loss. So very less percentage he is in loss. Then what percentage? Yeah. Generally, an option seller need not to be so accurate about the market direction. Even then, he will be getting a profit of 82%. If he is very sure about the accurate of that direction, then for sure he will be in 100%. For that matter, anyone who predicts 100% accuracy, he will be in profit. When the prediction goes wrong, this option seller will have some benefit, whereas the option buyer do not have any benefit. Option buyer is having a winning percentage of only 18% in each and every trade, whereas option seller has 82%. Now you choose what do you want to be, seller or buyer. See you.